Hello everybody and welcome back. Today we discuss everything to do with the stock, crypto and commodities markets right now, including the key levels that you need to be looking at. We've got the Fed FOMC meeting coming forward on Wednesday in the US, and that's sure to rattle markets. But on top of that, we've got lockdowns also occurring in China, killing the supply side. So we've got a demand dynamic, a supply dynamic, and a whole bunch of things that are not making sense in these markets. So let's start to break it down together right now to see if we can make sense of the madness. See you soon. So let's start by discussing the news here on our daily show covering the market close the 15th of March 2022. And really the news was about oil. It was about the markets rotating into what they know happens when we have a supply issue. And of course, now China is locking down due to COVID-19. Yes, that is actually what's happening. And that sent oil markets all the way back down to where they were. In fact, that's the story right now. A spectacular collapse enters the bear market for oil 5 days after settling at nearly 14-year highs. We did say on this channel, be warned of the people that get on television and start talking about $200 oil and $300 oil because it was unlikely to occur. And this is, of course, the perfect storm to knock it right back down. If you kill the demand side, what might we be doing? We might have now a supply shortage. Yes, the 2020 kind of supply shortage could be coming back with even more disruptions in the world economy. It becomes very hard for you to read through the charts. The market initially, they seem to be very happy with picking up the 2020 rulebook, which is of course technology and certain positions. Energy was down and we saw technology across the board really getting picked up. Google, Amazon, Tesla, Microsoft, Apple, Nvidia, it was all very, very, very bullish for it for that day. Let's have a look now what also happened, because was Wall Street buying the whole session? Well, I guess we'd have to say yes. There was a small sell-off in the morning in the first part of the session, followed by a rally, followed by, more importantly, a rally into the close. So they're feeling a little bit better going into this FOMC meeting, or at least on the surface, it looks like it. Will there be volatility? I'm sure there will. You know there's always volatility whenever Papa Powell comes out and just starts discussing anything about these markets. Use all the tools, whatever else he says, tools. Yeah, we'll do it. What I'm kind of hoping for the Fed to do here is to probably stop signaling. And that's something that they've done for a long time now. They've signaled to the market what they're going to do next. And you might think, well, that brings certainty to the markets. Yeah, it does. But it also means that the Fed doesn't really have anything to do. And they've been very gutless. I think I said this in the live stream. If you go down and you ask anyone in the street, people that don't understand the economy, what are they going to say about 0 interest rates or 0.2 interest rates? They're going to say it's ridiculous, regardless of whether it affects them or not. And I think this is a really important concept when you think about it. The Fed has created this massive asset bubble, and now trying to pop it is going to be incredibly difficult. So they'll raise 0.25%, but we'll talk about in just a few minutes how many more times they might raise it. Let's move over here to Jets. Jets was the best performer thanks to oil really getting smashed, going back into a bear market territory. Semiconductors, clean energy, XLK. It was really all those super popular stocks that were doing well in 2020. If we think about the Fed and the statement for the day, this is just a quick recap. We'll come back to this a little bit later, but of course 2 p.m. New York time FOMC forecasts, their FOMC meeting announcement, and then we've got Fed Chair Powell having a press conference at 2:30 p.m. The market expects a 0.25 rate. Basically, the Fed has told us, yes, that's what's going to happen. And then the market has a new expectation. That is 6 interest rate hikes for 2022. Now, you might say, well, that's ridiculous. They're not going to do 6, they're going to do 4, or they're going to do 3, or whatever you might think. This is what the market is currently expecting. So if we expect them to have maybe 4 to 6 of those priced into the current market, as long as there's not anything outside of that, you would think that this is not necessarily the huge story. It's really runaway inflation now. It's runaway problems in inflation, because the Fed does this. Yes, it might hurt, let's say, the demand side. People might start to slow down on that side, but they can't really control the supply side. And with the China stuff that's going on, it could be a really, really big problem on the supply side again and cause even further inflation. It's becoming a very tough point here when we're discussing markets. If we looked at just the stats, these are some of the cool stats that I think are coming out. One of them here is S&P 500 performance after VIX closes above 30 for 7 straight days. What does that generally occur? Well, 1 week, 1 month, they tend to really just be a little bit more negative, not very huge percentages. And then, of course, as we expect, most of these markets usually recover after a period of time. This is also something that I think we need to bring up because, of course, if we have 48 days of trading between 1928 and 2022, these are the worst performance periods throughout 1928 to 2022. We're getting into some of the worst performance periods here overall as a stat. Now, what's happened since then? Generally, it's been bullish. Obviously, if we believe it's any of these points here, we need to pay a lot of attention. But if you think this is still going to sort itself out, you are dealing with that kind of area or zone where some people would say dollar cost averaging and having high conviction stocks could pay off. Here we have another thing of talking of high conviction stocks. A lot of people's high conviction stocks, Amazon and Google, are still in stock split. So we need to remember, how have stocks performed after stock splits? Well, they've performed better than the rest of the market, that's for sure. Look at these stats. 3 months after, 7.8% on average, 13.9% in 6 months, and 12 months, 25.4%. I mean, it's almost ridiculous that a stock split can do this, but look, that's the stats. That's what the stats don't technically lie. It's what's happened. US 2-year, 10-year, this is what we call the canary. For anyone that hasn't watched our channel before, remember, if the 2-year, 10-year ever invert, what that usually means is that something is very sick in the economy. Think of the Fed as being able to control the short date in terms of what's going on with the markets and the interest rates. Think of the market dictating what's going on with the 10-year. Why do people look at the 10-year? This is the reason. The market dictates the 10-year. The Fed can kind of manipulate the 2-year, 3-month, that kind of thing. So if you see these invert, what's really happening here is the market saying, look, Fed, you suck. You don't know what you're doing. We're thinking this economy is stuffed. And usually who's going to be correct, the Fed or the market? In general, the market is more correct than the Fed. The Fed are kind of bumbling around trying to figure out what they're doing. They've got us into this point now with this massive quantitative easing that's caused it so that they can never really stop the printing press. Yes, they're stopping it for now, but eventually they'll have to bring it back. Otherwise, they really probably will bring some kind of ruin amongst all of the Western economies of the world. So, and this goes for any of the countries that have started printing. They can never really stop. They've just stopped for a little while here. So here we have the possible inversion. It hasn't occurred. We're okay for now, but that's just a little bit of a lesson on why we're using it. The canary usually happens 12 to 18 months before the full recession occurs, but I would be paying attention to it, and it's been very, very accurate in the past. PCC, put call ratio, we do look at this as well just to see how many puts versus calls. Sometimes if there's a very small amount of puts in the market, it actually means, let's say, complacency, and what ends up happening is the market often tanks at that point. In this case, we've seen it pretty much sitting in the middle, so nothing to discern from that. We'll move over to gold. Now, you would know we've been very bullish on gold here since December last year. We have removed our bullishness as of 2070, or at least have removed our short-term bullishness. The reason, it had moved incredibly heavily, and we were seeing 10-year rates going up a lot. And 10-year rates, while people think it's all about inflation and this is an inflation move, gold tends to do well in stagflation. Gold tends to do well in certain periods of the time, but it didn't really point towards moving any higher than 2070 just for now. We're back down at a level of support, which is pretty important. So if we get back down to levels like this, you've got to be paying attention to it. But you're looking for turnaround stories. And we haven't seen a turnaround story just yet here for gold. If you think about it, what is this current trend line on the way down doing? It's very steep and very nasty towards the sell side. I'd be looking for what we always talk about, things like lightning bolts, things on higher timeframes, things like double bottom patterns, something that actually shows some form of significant market structure around these supports. Otherwise, all you're doing is buying blind and saying, you know, I think gold's going to 10,000. You might be right, and you might be the reader of the market. But guess what? You also most likely will be wrong at least that price. You might be right in 6 months' time. There's nothing worse. There's nothing worse as traders and investors where you're right about the concept and you're wrong about the timing. I always liken it back to marijuana, I guess, when people all thought that was going to be the biggest thing, and then it absolutely got collapsed and then came back again a few years later. Same thing with lithium, same thing with all of these 3D printing, even semiconductors and AI. They've all had times where everyone thought it was the time for it, and then it turned out it wasn't. Let's move over to US oil. It's on support. US oil is probably a very interesting level here for bulls. You've taken off all of the Russian, Ukraine kind of invasion stuff going on. That's now come off thanks to, well, no, not really thanks to, but basically because China is going to be locking down parts of its economy. Unless they change that, that's going to be a bit of an issue for supply. It puts less demand on things like oil, and it's pushed down to where you would think there's a lot of structure. If buyers are going to come in, they will try around this level. Again, you're looking for lightning bolts. You're looking for some form of support. Let's move over to the stocks themselves. Let's talk about Tesla to start off with. So ahead of the Fed, where is it? It's sitting at $800. Is that good or bad? Well, it's testing it from the bottom up. I think shorters will be looking here, and it's going to be tough, but shorters are going to be looking here to try to sell it off this level. We know that the 20 moving average is the key point. So we've followed this now, and if you've been following the channel, you would be well aware of this. We have all done it as a community. We have followed this 20 moving average to the short side for 2 months now. So even further, we talked about it over here, but really 2 months. This became very, very likely. If we breach through the 20 moving average and the 200, which is this green line here, what are we doing? Well, we're saying, okay, well, maybe Tesla's actually moving out of its massive downtrend it's been in for a while. At $800, people are just saying, okay, well, can I find a daily short scalp? Or if it breaches past 800, is there going to be a buy? Let's have a look at how the price action actually moved on the session. So we had a lot of structure down here. That structure broke through really at this point, hit the 800, sold off, went slightly above the 800 and then came down. So I think for sellers, they'll be looking at it under this kind of level here, which is about 780, let's call it 785. And for buyers, they'll just be looking for it to breach through, come back, and then hopefully be able to pick it long. Very important zone, round number. Anybody that trades Tesla knows 800, 700, 600, they're all big levels. And it's every $100 is just a thing, because guess who trades it? Retail traders. And if you have a lot of retail traders, they love buying 800. Just ask yourself the question when you first started trading or investing, would you be prepared to take $699.80? Or would you prefer to take $700? That's the type of thing that you've got to think about. So many people go towards round numbers. It's unbelievable. And it's always the mistake that I see most new traders and investors making. Let's move over to Nvidia. Nvidia certainly still finding a lot of resistance. We've got a 20 moving average here on the daily. It's come back up. Could be a little double bottom. We've seen this now test the support so many times. I'm at a point now where, let's say we move this up to around this 210. If Nvidia breaks under 210, I'm not even convinced this massive trend line will hold it, because there's so many touches just before that zone. But at this point, look, it looks like a double bottom. It's a great company, as we know. Price-wise, I could argue both ways about whether it's cheap or not fundamentally. But here we have a bit of a double bottom, and we've got that potential for a breakout. I think we're going to need a lot more here for stocks like this, but it's at that resistance. Again, why? Because it's at a key level ahead of the FOMC meeting. Let's move over to the Chinese composite here. The Shanghai comp is getting obliterated, and this is really just all down to lockdowns. I mean, the market hates it. And while technology might be doing okay in the Chinese market, this is another market that's now just started falling off a cliff due to these lockdowns. It was doing pretty well. In fact, it was holding its own all of February and not doing much. And then come March, of course, the COVID crisis and lockdowns occurring back into it. Look at it now go down. It might be at support here, but it's again a sign of lowering activity in the economy. Remember, if the market's selling it off, what are they saying? They're saying, look, we don't think there's growth here. We don't like the multiples of these businesses. So what's that going to hurt? It's going to potentially hurt the supply side. And I think we've really got to look past this and say, are we in a disaster from the supply side and a demand side at the same time? Again, it gets very complicated. So here the Chinese composite is going down. I mean, I'm laughing because it's so ridiculous. It's just insane what's going on in this world. You've never seen it like this. You've never seen these massive supply, massive demand shortages that are all, the central board markets are trying to figure out what's going on. It's very, very tough. We move over to IWM. We have here supports, we have here resistances, and we're stuck in the middle of the zone. If we breach through the 210, what's going to happen? We're thinking, okay, the US market is decided to go bullish. Why? Because this is the small cap companies. They can't really move back through without the whole market feeling a lot better. If we breach underneath here, we've already talked about the next step, about 170 here on IWM. So it's still just a bit of a canary there in the mine, I guess, of all of these indices. US 30, Dow, it's looking okay. I mean, we probably need to break through about 34,000 to feel confident towards the buy side. We have the bases. We have a whole bunch of candles saying negative, negative, negative. but there's no follow through. Every time you go negative, there's no follow through closes. So the Dow is, again, not helping us too much. We've been talking about it on the weekly, and we got a slightly lower low close over here, slightly lower low. But if we get past 34,000, again, I think the Dow is saying maybe we'll look towards the bullish side. There are bearish signs though. Just let's have a look at through a few other things. We'll go through the US 100 here, the Nasdaq. Nasdaq continuously bounces, still a downward trend, still at this stage, sell the rips unless the Fed, for whatever reason, trigger massive buying. Where are we going to feel more comfortable in the Nasdaq? 13.8 plus. That's what I'm thinking, around 13.8 plus. Why? Supports, resistances, all of a sudden, something like this, you're feeling a lot more comfortable. That 14,250, you breach through that, massive double bottom, hugely more comfortable. Let's have a look at the actual Nasdaq itself though. So we'll bring up the NDX, or we can bring up the QQQ, it doesn't matter. Let's have a look at the weekly close. So that was a pretty bearish weekly close. We then go over to the daily, and the daily was putting downward pressure straight on the support. The bonds opened up on this next session, so the Tuesday session here. That's why I think the bond market was saying, okay, you know what? We're feeling a little bit more comfortable here for whatever reason. I'm not going to speculate. That's just what they were feeling. And I think it was more towards the tech side. And we basically were seeing an increase there. So the bonds and the stocks were agreeing. They've only agreed really in a few days. Here, here, here. The bond market then started disagreeing with the stock market at this point. It started disagreeing with the stock market at this point. So the next 2 days, I would say 2 days, are going to be very important what the bond market is doing. And if the bond market agrees with the stock market, we're going to have to pay attention, okay? We just have to. So I think that's where we are. With the Nasdaq, you know where the bears get back in control. And if we get underneath this 13,000 level, 13,050, oh, we will go down. I feel like a 12.2 could be in order, or a 12,000. So be very careful there. There are cases for bulls and for bears in this market. You can't just say, oh, I'm a bull or a bear. How do you explain exactly what's going on? You might say, well, I know markets go up, Tom. Well, yeah, cool. Very good. And if you have high conviction stocks, you're probably most likely going to be more right than other people. But it's very difficult to pick the next couple of days. And I think that's because the market is going to decide, regardless of what we believe or how we interpret this FOMC meeting or whatever they want to do. S&P 500 kind of looks like a little double bottom here. Yeah, we've got the lows, we've got that big rejection candle and big rejection candle. Why has it not fallen through? Because guess what? It hasn't gotten through these levels. Now, where this week gets really crazy is it's quadruple witching. So we have huge volumes of options expiring. And depending on where this market closes, let's just say theoretically it goes right down. We spoke about this at our conference. If the market was getting thrashed on Friday, do you know how many people would have to cover on Monday? So I think that's something that will play out. Just say it does end up falling through. The cover could actually push a big day through on Monday, regardless of where it is. It could actually push it through as people settle up these options. So there's huge amounts of options. It's quadruple witching, no follow through. The price here for the algorithms to get back into these markets short would be around 41.50. We know that the daily 20 moving average has held it back. We know we've got a downward trend line here. People are looking towards the double bottom. 4,300 is the contention point over the next 24 hours. You breach this, big deal. 4,400 next test. Breached 4,400, you've probably put the base in for the market. Like, you think about that on a weekly, what that's going to be telling us here, and it doesn't necessarily going to happen. It's just these are theoreticals, is what we're looking for, key levels here. 4,400 happens, and then we breach through there. Imagine if that was next week or the next 2 weeks. It's really telling us the market's probably bottomed. This rally, just from one day going into the FOMC, it's not enough. It just is not enough. It's strong, it looks okay, but it's not enough on these markets. We'll move over to Bitcoin. Bitcoin continuously looks horrible on the weekly closes, but then keeps having these sub-week rallies. We've got rejection candles all over 45, 46,000. We know that's where the market really makes the decision whether it wants to go full bullish long. At that point, you'd have a base in. So I think that still remains. It's sitting at 41K, which is pretty good for Bitcoin. It's been very resilient. A few people said to me, Tom, the crypto market's getting destroyed. What are you talking about being good? Yeah, well, I follow the crypto market from a Bitcoin, Ethereum standpoint. And as far as I'm concerned, they're holding pretty well. This is what happens during crypto winters or crypto bad times. People come back into the main two coins and they won't be confident to go into the other coins so much until they see the big two holding up, if not moving in the right direction. Bitcoin sends the tone, Ethereum sets the second tone, and then you get all of the other big ones, and then you get into the very questionable projects past that point. So here is the big support, 37K. If you're feeling bearish, I think 37,000 is your big zone here. And if it gets through that, we could be going towards the 29, 32 kind of range. I think it really makes sense. We've got 2050 almost crossing here on the weekly to the downside, a bearish kind of signal cross should it occur. But yeah, not enough for you to go, oh, I think it's short or anything, but it's certainly there. And that 45 to 46 range, very important here for the crypto markets. As always, I just really like to remind people, if you haven't already, come follow us over on Twitter at FX Evolution. We appreciate it. We're getting up there near 5,000 followers here, and we've only just started using it. So thanks so much for joining us over there. And remember, so we'll move over here to the economic calendar. Just again, 8:30 a.m. we have core retail and retail sales. That's 1 hour before the US market opens, 8:30 a.m. New York time. And then we have the FOMC statement, federal funds rate, press conference, all of that stuff coming through. And that's at 2 to 2:30 p.m. So the markets might be a little bit quiet moving into this. I still would usually expect some pickup in volatility over the event. And to say that we know where it's going, I think that would be foolish. We're really stuck in a market where we need the price action to tell us where it's going. You might know, you might say, see, I told you where it's going, but do you really do it? Really know where it's up to? And would you be prepared to place large trades or investments on that position? So anyway, thanks so much for watching. If you enjoyed it, please subscribe, smash that like button. It's great to be back. And also shout out to anyone that was at our conference. We hope to make it over to the US this year. We'll be making an announcement on the channel. It was a great event. We had great talkers. I obviously love getting up in the crowd and having a chat as well. And, you know, it was great to just meet up with so many people. So if you're interested in that type of thing, let us know in the comments down below. If you're interested in that, we'll probably do it in Vegas in the US. And yeah, I'd just be interested to know how many people would be willing to come. So thanks so much. Great community. Appreciate it. Bye for now.